All right, good evening, everyone. It's Fearing. It is currently July 13th, 2025, and here's a lesson on intermarket sequential SMT, also known as ISSMT. This is the third video of this little sequential SMT mini series where we're covering what sequential SMT is, what hidden sequential SMT is, and the final thing that I use in terms of sequential SMT being intermarket sequential SMT. Now, like I said, you have to understand sequential SMT before you move on to this video. If you're watching this video specifically without watching the sequential SMT video, the first thing I have to say is stop skipping videos in the WAP. It's very crucial for you to go through this in order. Why? Because each video builds off of the next one. So understand that before you start skipping videos again. And like I talked about in this video, you have to understand the basics of ICT. You should have watched a Day QT YouTube video alongside his free interview, and then same thing with the significant highs and lows and the time frame alignment that we have posted in the WAP. Now, what is intermarket sequential SMT? Intermarket sequential SMT is, like the name suggests, it is intermarket. It is the divergence among correlated markets, and I specifically say markets compared to assets. It is markets. So with regular sequential SMT, we have a divergence between previous quarters. The same thing applies here within this concept, but however, instead of looking at NQ versus ES versus YM, we could treat these together and we look at index triad versus Forex triad versus interest rate triad. Now, when it comes to interest rate triad, that I really do not use. I rarely ever look at it, and if I am going to suggest you to look at it, it's going to be on a higher time frame, such as looking at quarterly cycle, yearly cycle, and occasionally a monthly cycle, but really I kind of see mixed results with it. I don't use it enough to really gain enough experience or collect enough data on it. That will be up to you and your own data collection to determine whether or not you're going to use it. But when it comes to index triad, like I said, it is NQ, ES, YM, and Forex triad, aka our currency triad, is Euro, USD, GBP, USD, which is the pounds, and DXY, which is your dollar index. An example of this would be if Euro USD slash GBP USD raids the previous high and DXY fails to. So we have regular sequential SMT there. However, it becomes intermarket when the indices fail to run out the previous high. So it would be something like this, where we'll say this is the indices and this is Forex. Indices do this, Forex does this. Now, hold on here. This is more specifically Euro USD runs the previous high while DXY fails to. And I should probably fix this up a little bit and make it more like this, Euro and DXY. This is what it would be. This is your intermarket ISMT. Indices fail to run the previous high, Euro runs the previous high, DXY fails to run the previous high. This is your intermarket sequential SMT. You would be looking at indices, you're going to see no sequential SMT. You're going to be like Fearing, finally found a reversal without a sequential SMT, but in fact, there is, and it is intermarket because Euro and DXY in fact have that bearish sequential SMT, and that is what makes it intermarket, and that is what we can utilize on indices. Now, what is not intermarket sequential SMT? This is what I almost said beforehand, before I fixed up the Euro and DXY. Intermarket sequential SMT is not when the entire index triad runs out a previous cycle high, while the entire currency triad fails to run out the same high. So we'll draw it out again. Initially, what I was drawing the first time. So indices, Forex. It is not this. It is not this. It has to be actual sequential SMT within the markets. So, like we showed beforehand, Euro would have to form sequential SMT with DXY. Of course, it doesn't just have to be Euro; it could be the pound as well. We have to have sequential SMT on either Forex or indices in order to validate intermarket on the other one. So, biggest thing to understand, and that's the biggest thing that I got stuck on when first understanding this concept. So now we'll move on to the thing we were talking about in the previous two videos in regards to higher time frame narrative. I'm gonna repeat myself, but I want to make sure that you guys actually understand this. So again, like I've said before in the previous videos, the overall sentiment of your higher time frame market structure will determine which intermarket sequential SMTs we can consider weak and which ones we can consider strong. If market structure is bullish, so imagine we're within the buy side of the curve of this market maker buy model, we want to see bullish intermarket sequential SMT form and bearish ones that do form be invalidated. We want to see bullish ones hold, we want to see bearish ones be invalidated. That's not just that's what we want to see, that's what we will see. We have to first analyze what stage we are within on our higher time frame market maker buy model to understand this. Now, something to keep in mind is that we will have times where we do fade the higher time frame order flow. However, this example that I'm going to use is going to be on indices. Now, of course, time frame alignment, I'm not going to cover this again in this video. We've already talked about again in the previous two videos, but for those who wanted to see it again, here it is. It's the exact same time frame alignment. I just want to make sure you guys don't get mixed up on that. It's the exact same time frame alignment we use for regular sequential and hidden. Same thing is applied to on currencies, or more, I should say, intermarket sequential SMT. Exact same time frame alignment. So, what I'm getting at here in regards to when we can actually fit the higher time frame order flow. First things first, we have to understand where price is relative to our higher time frame market maker buy model. Now, as we know, price has been over the last few months, as of when I'm recording this video, it's currently July 13th, 2025. As of now, we're trading above all-time highs, and we have been within a market maker buy model. We've been within the buy side of the curve. However, at the smart money reversal, you will identify, and the smart money reversal was right here during April 7th, 2025. You are going to look at the low of the reversal and see that there was in fact no sequential SMT. However, let's look at currencies really quick and look at the exact same date, April 6th. So the opening of April 7th, on April 6th, market open. Anyways, on currencies, what do we see? Well, we can see very clearly that there is in fact hidden monthly cycle, or not hidden, regular monthly cycle intermarket sequential SMT. Euro fails to run out the previous cycle low. DXY fails to run out the previous monthly cycle high. When you look at the pound runs out the previous monthly cycle low. That is your intermarket sequential SMT. There is no sequential SMT on indices. There is sequential SMT on currencies. That is your intermarket sequential SMT. Now, higher time frame context. In the sense of higher time frame, in the sense of overall what we can look at on indices is that indexes, they are overall so bullish. They go higher week after week, not week after week. We go higher year after year, year after year, and so on and so on. We constantly trend higher. So we know that price is constantly forming market maker buy models and delivering from them. If we understand that, we know that eventually after this entire sell-off, we are eventually going to get a smart money reversal. And as we can see here, our smart money reversal took place after price displaced and reached EQ of our higher time frame dealing range, which was here. I'm going to the weekly chart and make it very easy for you guys. So before price sold off aggressively back here during 2022, anyways, when price reversed here, that is the low of our dealing range, and this is the high. As we can see, price retraced all the way perfectly into the discount of that dealing range. That gives us some higher time frame context for a smart money reversal, and what confirms it is the fact that we form intermarket sequential SMT at the lows. That is how we utilize it, and this is how we can deliver away from it. Because again, you look at indices right now, there is in fact no sequential SMT at the lows. There is no pre-stay low SMT, like a weekly cycle. There is no monthly cycle. There was none of that. There's no hidden anything, none. Due to that, we can then utilize currencies, and we did identify intermarket sequential SMT, monthly cycle intermarket sequential SMT, and that was a confirmation of a smart money reversal. And from there, we delivered all the way up to all-time highs. And that is currently where we're at today. So hopefully you guys enjoyed that lesson. It is a little bit of a tricky concept. Of all these things that we've taught so far, this is probably the most tricky one. It will take some data collection and overall experience to really understand this, but there should be a fairly good introduction into what the concept actually is. Feel free to rewatch it. You probably will have to. If you have any questions, either ask in the questions forums or attend our live calls, and be sure to ask in there. Otherwise, I'll catch you guys all in the next video.